Hello, my name is Yoojeong, and I'm joining you from Singapore today to talk about the Aberdeen Asian Income Fund's full year results for 2023, which have just been released. The Aberdeen Asian Income Fund aims to invest in the most compelling and sustainable dividend stories across Asia to support both long-term capital and income growth. Over what was a challenging year, the fund delivered positive absolute NAV or net asset value growth ahead of the benchmark MSCI Asia Pacific ex-Japan Index. Alongside this, we were pleased to be able to deliver a 17.5% increase in dividend to pay a fully covered dividend per share of 11.75 pence. This represents the 15th consecutive year of dividend increases for shareholders and was a yield of close to 6% on today's price, which is double the yield of the benchmark. As a long-term, quality-focused investor, we look for companies with easy-to-understand business models and trustworthy management teams that have a track record of executing on strategy and providing clear and transparent disclosures. For many years, the portfolio has had a small weighting in China, especially when compared to China's presence in the Asian benchmark. And this was a key contributor to our NAV growth over the last year. The Chinese market was amongst the weakest in the region, and we largely avoided this by actively choosing to invest in quality businesses listed elsewhere in Asia with higher and more consistent dividend policies. We have been reminded that Asia is far more than a single country and that there are world-class businesses offering both capital growth and rising yields across a diverse range of geographies and sectors in Asia. For example, this fund has long held technology as one of the most interesting sectors in the region, especially as IT hardware can cover a vast range of different companies. In the large cap space, the biggest single stock position in the fund is TSMC, which owns over half of the world's advanced semiconductor manufacturing capacity. This means that TSMC is in a good position with strong pricing power to pass on cost inflation to customers, and they generate strong cash flows which support their future investments. That can contribute to their net cash balance sheets, and it allows for increasing returns to shareholders. The semiconductors that TSMC produce are the building blocks for all our data needs, and their extensive customer list include the likes of Apple and Nvidia. One of the key benefits of a closed-end fund is the ability to invest in small cap companies that can be more nimble and provide better growth opportunities. One of Aberdeen's strengths is our team of 40 analysts and fund managers located across different markets in Asia who can cover the local markets in real time and with the benefit of local language and culture knowledge. About 20% of the fund is invested in companies with market capitalizations under 2 billion British pounds. An example would be Acton Technology, which produces the switches for controlling data flow in integrated circuits. 2023 saw huge focus on the potential for artificial intelligence across industrial and consumer-related applications. This growing demand provides a positive tailwind for technology companies such as TSMC and Acton as they produce hardware components to support increasing AI usage. Elsewhere, India has been capturing a lot of headlines given the strength of its equity market. India has historically not been a good place for dividend hunters such as ourselves, given the below average dividend yields. However, we look at Indonesia as another attractive market in the region, which has similar population demographics to India, but is trading at far more palatable valuations for this domestic consumption growth story. Over the past year, we've initiated AKR and Bank Mandiri in Indonesia, which we believe offer good growth outlooks and opportunity for growing dividends. Moving on to 2024, I'll just provide a quick overview of what is shaping up to be another interesting year for Asia. As you may be aware, close to half the world's population will be heading to elections this year, We've already seen Taiwan and Indonesia vote for consistency and stability of policy. In a few weeks, we'll see the outcome of India's elections, and then towards year end, we'll have the US elections as well. Whilst this may result in a lot of policy-related noise, we'll continue to focus on quality to find companies that have solid business franchises that can do well regardless of external influences. Leveraging off our in-house analyst knowledge, we'll try to buy these companies at attractive valuations, especially where market volatility creates pricing opportunities. Our focus on quality is reflected in the portfolio's ESG rating of A from MSCI, and MSCI have also rated this fund better than the benchmark for each individual component score for environmental, social, and governance factors. Finally, the dividend outlook for the region is also bright. Dividends contributed to over half the total returns delivered in the region, and corporate balance sheets in Asia look very strong relative to developed market peers, giving Asian corporates choices still to invest in growth and to increase returns to shareholders. Growing corporate dividends is supportive to our own ability to increase dividends to our investors, and we'll continue to work on increasing dividends going forwards, something that is also important to me as a fellow shareholder in the Aberdeen Asian Income Fund. Thank you very much for your time and interest today. If you would like more information, please visit our website, www.asian-income.co.uk.